Hi friends, welcome to Econ Masters. In today's session, we are going to analyze what is balance of payment. We know balance of payment is an account which record all the monetary transaction of a country with rest of the world. A country has to deal with other countries in different ways. They are dealing in terms of visible goods trade, invisible goods trade, as well as capital transfers. All these transactions will have an equal and opposite monetary transaction, right? So a balance of payment which will record all the monetary transaction. We are converting the physical transaction into, that is physical quantity of transaction into monetary transaction, and we are recording it. So that particular record of transaction is known as balance of payment. Let's see a definition given by Kindleberger regarding balance of payment. Balance of payment of a country is a systematic record of all the economic transaction between the resident of a country and resident of foreign country during a given period of time. So this given period of time means usually it is a year. So during a financial year, what is the total quantity of financial transaction between a resident of a country with the rest of the world? Mainly, there are three major components for balance of payment, that are current account, capital account, and financial account. So let's understand what is meant by current account, capital account, and financial account. Current account, which record all the visible and invisible transaction of a country with the rest of the world. It means current account which record all the visible goods transaction as well as invisible goods transaction. Visible goods means the physical goods, the tangible goods, and invisible goods means services like tourism, banking, insurance, etc. So current account record all the visible and invisible goods transaction with the rest of the world. Capital account. Capital transactions between countries are mentioned through capital account. Capital transactions include purchase and sale of assets, non-financial assets, okay, like land, properties. The capital account also include flow of taxes, purchase and sale of fixed assets, etc., by migrants moving out or in to a different country. So all the capital transaction of a country with the rest of the world is recording under capital account. The next account is financial account. So financial account record all the financial transaction of a country with the rest of the world. The flow of fund from and to foreign countries through various investments in real estate, business ventures, foreign direct investments, etc. is monitored through the financial account. This financial account mentions the changes in the foreign ownership of domestic assets and domestic ownership of foreign assets. So all the financial transactions are recording in financial accounts. So these are the four major elements or components of balance of payment. What are they? Current account, capital account, and financial account. What is current account, capital account, and financial account? Now we have to know what is current account balance, capital account balance, and financial account balance. So let's start with current account balance. So current account balance means if the sum total of balance of trade in goods, balance of trade in service, income balance plus current transfers is a positive figure, that is current account balance means A plus B plus C plus D, that is balance of trade in goods, balance of trade in service, income balance plus current transfer balance. If sum total of all these four elements coming under current account is a positive figure, then we can say that the current account is a surplus. And at the same time, sometimes what will happen, if the sum total of four of these element will become negative, it means the current account is deficit. Sometimes what will happen, the figure will become 0, it means the current account is balanced. Capital account balance. So capital account balance is calculating by using the formula inflow of value of capital assets minus outflow of value of capital assets. If this value become a positive figure, then we can say that capital account is surplus. And if the value is a negative figure, then capital account will become a deficit. And if the value is 0, then we will say that capital account is balanced. Is financial account balance. Financial account balance is calculating by summing up all the financial assets received, inflow of financial assets minus sum total of financial assets went out of the outflow of financial assets. So by looking the difference, we can say that whether the financial account is surplus, deficit, or balanced. If sum total of foreign direct investment, foreign portfolio investment, and other investments is positive, then we can say that the financial account is surplus. If this value is a negative, then financial account will become deficit, and if the value become a 0, then we will say that the financial account is balanced. So these are the different balances which is coming within different accounts of balance of payment. When we look overall balance of payment, there are balance of payment surplus, balance of payment deficit, and balance of payment balanced balance of payment. So balance of payment surplus means if sum total of all this account, that is current account, capital account, and financial account, become a positive figure, then we will say that the balance of payment of that country is a surplus. And at the same time, if sum total of current account, capital account, and financial account become negative, then we will say that balance of payment of that country is a deficit one. And if the value become a 0, if the value is 0, then we will say the country's balance of payment is showing a balanced position. So this is all about balance of payment. I hope you understood what are current account, capital account, and financial account, and what is current account balance, capital account balance, and financial account balance. Also, what is balance of payment surplus, deficit, and balanced balance of payment. I hope it's enough for the session, and we will meet again in another session with another important topic from economics. Okay, bye. Take care.